Hello, my name is Josh Mays. I'm a financial advisor at Wright-Patt Credit Union, and I'm here with Kevin Willardson. He is a professor at Wright State, and today we're going to have a global economic macro discussion and kind of explore some of the recent events. Um, Hi, Kevin. Welcome. Do you want to introduce yourself a little bit?
Yeah, sure. I'm Kevin Willardson. I'm actually soon to be an associate professor of economics at Wright State. My primary specialty is applied micro, urban, and regional context, um, and public choice economics.
Okay. So we did a discussion about 2 years ago, right after the pandemic went, kind of crazy and ruined everything for a little bit there. Um,
hmm
do you want to kind of give an update on the local situation and how you think government funding and property tax and all that is going?
Sure. So if you recall from our last conversation, for anybody that's not familiar, I had basically kind of stated that I thought that local governments that rely more heavily on property values as opposed to other forms of taxation. So local governments can tax sales, they can license and fees. There's a bunch of different revenue mechanisms that they can use. But the large ones, or at least the ones that focus primarily on home values or property tax, I thought would do better throughout the pandemic, just because people were losing their job or they were losing income, and much of the income that was being supplemented by the federal government wasn't taxable anyway, at least by the local jurisdictions. And the kind of thought process was that, well, people um, who are struggling, one of the last things they're going to stop paying is their property tax because it's built into their house payment. And that, I think, at least in kind of retrospect, have been proven, uh, I think, pretty close to what was going to happen. Um, Now, I think one of the other things that has kind of really bolstered this argument is the fact that because of the federal government's response to the coronavirus crisis, they printed a lot of money. Like, and they didn't just print a lot of money; they printed a lot of money. Um, and I think the last estimates that I saw was roughly 40% of all of the money that's ever been printed in this context. So the one kind of result of that is that people in the know, when they understand that inflation is coming, right? Uh, Inflation is always and everywhere a monetary phenomenon. They tend to run to real assets, and the primary beneficiary, or at least the assets that benefit the fastest, are the ones that are what we would call kind of inelastic, and at least in terms of supply. So what that means is that there you have this kind of two-part thing that's happening. The increase in the money supply is going to raise prices, but also the increase in demand because of the increase in money supply has radically shifted home values. I think the last time I looked, relative from 2019, many places around the United States, especially in like Tennessee, Texas, Florida, all across the Mountain West, are up almost 40% from their values 2 to 3 years ago. So there's been a huge increase in evaluation. So if you think about it from the prospect of a local government, then who gets all of their revenue from property taxes, it's actually been a good year, right? Because all of these properties are raised in value. They don't even have to adjust the rate, they just gain more nominal revenue. So this is going to vary from municipality to municipality. Some municipalities actually have restrictions on how much they let the value of a home rise year over year. And so I would imagine that many of those are going to be binding. Whereas certain particular states that don't have that issue, um, like those people are probably going to see their tax bill increase significantly, just due to the increased value of their home. And then there's, again, in other places, there's kind of a lag in reassessment. So Florida does theirs every year. I think Ohio does theirs every 2 years, if I remember right. Um, so that has turned out to be probably kind of the saving grace for many of these local municipalities, is that they have had an increase in um, property tax values, or excuse me, property values, which translates into more tax revenue. I think that you'll probably here shortly start to see a revolt from homeowners who likely will see almost a doubling of their property tax um, over the next couple of years. It really kind of depends on whether or not you think housing prices have done growing, if they've leveled off. It's starting to give that impression. At least the growth in the change is slowing. So the values of homes are still growing as they typically tend to do just due to monetary inflation. But at least by my estimates, it looks like that growth is slowing, and it's slowing considerably. Um, so there's really kind of three different things that are floating around here. The first one is you have the printing of money, right, which is going to increase the price of housing. You have that increase of demand because of that money printing. So people who were holding on to bonds might sell them to buy assets, right? Which is going to push up the price, and that should have a downward pressure on bonds. And then there's a third thing that I think is less understood. I think everybody's seeing it, and that's migration. We are seeing the mass migration. So when there's been a concept in urban economics where we tend to think that real wages equilibrate, I'm sorry, across two different jurisdictions. So imagine you have city A and city B, and ceteris paribus, they're the exact same city. They have all the same amenities, blah, 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 blah. If the wages in city A, I'm sorry, are twice those of city B, you would expect people from B to move to A, which should push down the wages in A and increase the wages in B because of the supply changes.
Right.
And one of the things that we've noticed is since about 1970, 80, somewhere in there, there's been a real lack of migration. And it was been kind of a puzzle for economists because, like, if you can make more money somewhere else, why don't you leave? And there have been a few different explanations for that. But coronavirus has kind of thrown a wrench into everything because now we're seeing mass migrations, primarily out of New York, California, and Illinois. One of the estimates that I saw, I was talking to a real estate friend he's in Salt Lake City, Utah, and he was suggesting that he thinks there has been an influx in the thousands of people per month from New York City just to Salt Lake City alone, and that they're all coming. Like, I mean, if it's just like California, if you there's a literally it's a trailer in a trailer park can sell for $500,000, and then in San Jose County or something, and then once you come out to the Midwest or the Mountain West, I'm sorry, um, that can buy you an acre of land and a 3,000 square foot house. And so so you can see how there's a lot of pressure pushing up housing prices, especially in those handful of states, Florida, Tennessee, Texas, and then the Mountain West, Idaho, Wyoming. I think year over year, Wyoming and Idaho have actually seen the largest percent increase in the housing values. And it's partially due to this migration effect. That and their housing values were already low to begin with.
I have seen that quite a bit. So a lot of this is important because local governments and state governments can't run a deficit, right? So they have to raise property tax or some sort of income through taxation to fund their liabilities.
Mm-hmm.
Is that right?
Yeah, so this we'll see how responsibly local municipalities are being run. So this increase in property value should actually bring in more real tax revenue. And when I say real, like inflation adjusted tax revenue, year over year as property values rise, because if they just hold the millage rate constant, where you were paying 1,200, now you pay 1,800 in terms of property taxes. And that's going to multiply that by everybody in the jurisdiction. And now you have a lot more nominal revenue. What is unclear, well, it's not unclear, usually you would think a responsible steward of government or public money would then reduce the millage rate, right? Or use that money or cut taxes somewhere else. And that does happen. I don't want to say that it doesn't, but most of the time what ends up happening is they just ratchet back a little bit So they end up keeping more nominal revenue than they did the year before because of the increase in the values. They don't completely offset, right? Because if you think about it, that makes sense politically because it allows them to spend more money.
Sure.
And so I would say that especially the municipalities that rely primarily on property tax revenue are probably flush with cash right now because of that change. The ones that relied heavily on income, and I know that income is a popular one around Ohio, they're likely hurting more so. We don't really know for sure because we don't have the year-end reports from the last year yet. But yeah, no, I would imagine that property tax they are flush with money, and you'll probably start to see some sort of public works projects.
Which we could use in a lot of places.
Yeah.
So do you think this is more of a transitory environment, or is this
No,
gonna
this is
stay,
permanent.
or you think it's permanent?
And what I mean by that is that the housing value, because at the end of the day, the inflation that the money that was printed is going to start working its way through the system. And I think the first places that you've seen it are in property values and other inelastic things. So another good example of this is I think that's part of the reason something like used cars have gone up so much in value is because there's not a whole lot of new vehicles being produced due to the kind of the microchip shortage. So that means that there's a simultaneous restriction in supply and the fact that everybody needs a car, at least in the United States, for the most part.
Sure.
And so that's going to put upward pressure on those prices, given the fact that people are just going to bid them up. They have more money to bid with because the Fed created a bunch of new dollars. So those things where supply is relatively inelastic, basically straight up and down. If you were to look at the standard supply and demand graph,
Yeah.
I think they'll see the largest price increases first, given the new money supply. And the reason that I think that housing values. So again, let's go back to those three factors. Housing values are not going to deflate because of the inflation, right? The inflation is basically going to everybody's. Let's walk through kind of a simple economy. So imagine it's just the two of us, okay? And there's $100 between the two of us that we use to exchange goods and services, and then we just for the sake of argument, you have $50 and I have $50. So we each have 50% of the purchasing power, whatever. And then I snap my fingers and now you have $100 and I have $100. So we doubled the money supply that's in this little economy. Well, presumably what you would expect is prices will also double, right?
Right. Yeah.
Okay. And so that's what I mean when I say that because of the inflation. And until you remove that money, prices are going to stay at that new level. There's no incentive for them to come down.
Sure.
Okay. So that's
Right.
the same thing that's happening in part of housing prices due to the inflation. The money printed, it's pushed it up, and now housing prices are at this new level. So with respect to that, I wouldn't expect housing prices to come back down. But that's not the only thing affecting housing prices. The other things affecting housing prices are these migration and the people running from the inflation, right? So those were the other two aspects. Now those, as people decide, okay, I'm not, I'm comfortable now that the inflation has worked its way through the system. I'm going to offload this asset at its new higher price, and then I'm going to go buy something else, right? So that would actually have downward pressure on housing prices. So it depends on which one you think is bigger. Okay, so is the increase of the price of housing more a result of the inflation, which is my opinion, or the result of people running to fixed assets? I think housing prices, if they do come down, won't come down very much. Just because, I mean, I will accept the fact that they may come down as people leave those assets into other things, and when the migration is finished, right?
Sure.
So when these people have left. I would expect housing prices um, to stay relatively high
Do
because
you
of the
think that the
inflation.
migration will be quicker now than it might have been in previous examples because of the transportation and just the way things are today?
Yeah, that well, and the transportation costs are not the result. Like a reduction in transportation costs, I wouldn't probably say that's responsible for the migration. I would say the big responsible to the migration is what I would consider to be bad public policy on the part of California, New York, and Illinois over the
Well, yeah,
last 15 years. And it really, the migration to stem that migration is going to depend on what they do. Right. So here, as ironic as this might sound, your housing value may be um, determined by what Illinois does if you live in Ohio, if that makes sense.
yeah,
Because people running from Chicago may decide to move to Columbus.
sure. I don't know how long previous migration periods or cycles lasted. Do you have an idea? And maybe compared to this one, do you think it'll be the
This
same
one
roughly?
this one looks to be a lot larger. And I think part of the reason that it looks to be a lot larger is because we've been waiting for it for so long. I did some preliminary stuff uh, probably last year, and I would imagine that there's going to be a realignment of roughly, if I had to guess, several million people over the next few years.
Okay.
Um, and the primary beneficiaries of the is going to be the South and the Mountain West.
Yeah. Well, that's where the prices are probably the most depressed in those areas too.
Right. But I know that yeah, in some of the bigger cities in Idaho, Utah, Wyoming, are seeing substantial increases in property values.
So you think this migration will probably take a couple years to finish out, maybe 5 years or something? That's
Yeah,
hard to put an exact time frame on it, but
if you're gonna force me to put a number on it, I would say yes. I'm reluctant to really say anything. And the part of the reason that I am is that I think California and New York are the big losers here in with respect to people leaving.
yeah,
Very, very small policy changes in terms of taxation, spending, and some of these other things could stem that migration because there's a reason everybody was living there. And there was a reason that everybody was living there and dealing with higher prices and kind of crime and some of the other stuff that comes with that. Because California and New York, or because of other amenities that aren't offered in these other cities, um, are nice places to live. It just got to the point where people couldn't handle it anymore. And I think much of
yeah.
that may actually be responsible because of their policy around COVID. And now that hopefully it looks as though we may be turning the corner with respect to COVID, um, the hemorrhaging may stop. So if there is a continual movement, I would expect it, yeah, within the next 5 years. And again, that's barring some other, like,
Well, yeah, sure. No
if
one
the
knows for sure,
last,
but
right, if the last two
everyone wants to
years
know
has taught
how
us,
much and when and how many and
right, if the last 2 years has taught us anything, anything can happen. Um, does that kind of answer your question?
yeah, yeah, yeah. So I was just kind of curious what you thought about that because I sort of feel like previous migrations might have taken longer just because of the modes of transportation and just
No,
different
that's
things, but
fair. Yeah.
this one might be a little bit quicker just because it seems like everything moves from hour to hour.
Right. And I mean, it's not like, I mean, for instance, Nashville, Tennessee, which was the city I was in just last weekend, um, is a big city and it can absorb new people. One of the sticking points in previous migrations was finding a new job and taking the risk. And with today's kind of reduction in transaction costs with monster.com and some of these other places, and the internet just in general, I can have a new job and a new place to live before I even pack my car.
Yeah, yeah, definitely.
Right. And so that you're absolutely right in that respect. These migrations should be a lot smoother, ergo go much faster
You
relative
could
to
even
previous decades.
you could even live in Tennessee and work in California and just work remotely.
Right. Although I don't know if I'd want to pay the taxes.
Yeah, probably not. So with housing, do you think, or just, I mean, just inflation in general, we can just talk about inflation in general. So before even COVID, we had the tariffs, flying around on everyone. We had tariffs on
Hmm.
lumber and, steel and everything else.
Right.
You think that plus COVID, plus the migration, plus the dollar printing just was a huge, domino effect on
Um,
inflation that just put it through the roof.
right. So, um, I guess with respect to this, I think my primary concern at the moment would be stagflation.
Yeah,
So stagflation is this phenomena when you have simultaneously high unemployment and high inflation. So if you can step back and consider the Fed's dual mandate, they're basically told that, hey, you need to kind of walk the fine line between inflation and unemployment. So I can curb unemployment, i.e., put people to work by printing money and then having the government spend it, at least in theory. I think one of the things the Obama administration figured out is there's no such thing as a shovel ready job. I think that's a famous quote that he had, right? Excuse me. So in 2008, this was kind of what they did in order to get people back to work after the Great Recession. Um, so the flip side to that is that if there's too much inflation, you want to increase interest rates, which is effectively reducing the money supply. But the result of that is that you may actually increase unemployment. Um, so you can see how
yeah,
like, they push the lever one way, it fixes one problem, they pull it back, it fixes the other.
sure.
What happens when you have both?
Uh,
Um,
Nothing good.
right? And the reason that I say that is that it kind of puts the Fed in a bind. If they have both high unemployment and high inflation, their standard tools for dealing with those. So to fix the inflation, you're going to make unemployment worse, and vice
Right.
versa. Um, and the reason that I'm afraid that unemployment or stagflation may perhaps be around the corner is that we're seeing a lot of supply shocks, and that's with especially kind of with regard to Ukraine and the war that's happening there. And the coronavirus pandemic in general has shocked supply chains. It's made it difficult to get things produced. So you see this reduction in supply, and a reduction in supply means that you can't, and then you're still bound by price. Like firms are losing money, and if they start losing money, they're going to start laying off employees,
Right.
right? And then if you combine that with the fact that you have inflation and we're printing a lot of money, um, you're going to have simultaneous rising prices and less employment. And at least in my opinion, I think the good economists have been sitting back since 2020 and saying everybody needs to get back to work, right? Because we potentially run this risk. One of the people that I tend to follow was Brian Kaplan out at George Mason University. And he's basically been saying that our public policy since roughly March of 2020 is just a recipe for stagflation. And I'm afraid that now that we're starting to see the inflation combined with a war in the Ukraine and the fact that the Fed is quote unquote out of bullets may result in a period of stagflation, especially considering that you're now seeing the Biden administration and other people in Washington start talking about price controls, which
Yeah.
I think would be kind of the worst of all possible worlds. I mean, we did this in the 70s and it was an unmitigated disaster.
I don't imagine that going over well just as a general free market. People, I don't.
You would think, but again, the it's not
It's the lesser of two evils, maybe.
well, the lesser of two, more along the lines of like you have to consider the fact that there is actual political pressures. Politicians have the incentive to scapegoat in a sense. And I'll give you a good example. You see people like Elizabeth Warren or some of the Biden administrations claiming that the increase in the price of gas is due to either Ukraine, which I've heard, and that there's some truth to that. I mean, because there's a reduction in supply, or the greed of gas companies. And it's like they've always been greedy. They just all of a sudden got greedy now. It's not profiteering. It's the fact that, and not only that, but you can go back and look right around 2020, early 2021. That's when the price of gas really started to tick up. And if you look at it's a straight line.
Yeah.
Because you printed a whole bunch of money. This has little to do with Ukraine. At least the growth in the gas prices.
Well, when COVID hit, I mean, oil futures went negative to through the
Right.
roof, and they've done that again. Basically, they just went up. Since the Ukraine thing, just the market flipped down and then up 30% in a day some days.
Well, and the other thing is that Ukraine or conflict in general just is a lot of uncertainty.
Yeah,
I would imagine that there's those types of large movements like that. Either people are operating off of large private information, which is possible, or they're just speculating. At that point, when you see those kinds of movements,
yeah,
I would call that gambling.
yeah. It's more leverage and things than just
Yeah.
speculation. Yeah, but I think also that the third world and some of the other countries we don't probably think of are experiencing a lot more issues with that than we are. So do you think
Oh,
that also contributes, maybe leads to a dollar crunch at some point, which turns into a liquidity issue?
I guess so. It's there's kind of two topics there. Um, when you're thinking about the third world in the sense of like abandoning the dollar,
No, not necessarily. They're just having issues getting enough dollars to purchase oil and things.
so what I guess what would be the mechanism there? Why would they have an issue getting dollars?
Maybe the swap lines aren't functioning or something with the Russia. A lot of them made them a lot of purchase oil directly from Russia. So I don't know if it was Indonesia or Singapore. Maybe I don't think it was. It must have been in Indonesia. They were having a hard time getting gas. It wasn't that they couldn't pay for the gas; it's just they couldn't get enough dollars to purchase the gas from.
What, because of the sanctions?
Yeah, because of the sanctions, so they couldn't get enough oil in. So they were trying to appeal to the IMF for assistance.
Okay.
So it
It's I'm not really familiar with.
doesn't have to be that specific situation, but do you think that could turn into some sort of liquidity issue for us, even though we've
Um,
got so much liquidity technically in the system already?
no, just because we have every incentive to get them dollars as fast as possible.
Yeah,
And the reason for that is that I would be more concerned about the reverse um, scenario, at least in the long run. I'm not really sure about the short run. I think that Saudi Arabia, considering uh, yuan
yeah,
for fuel exchanges, I mean, part of the reason, I mean, and if you think about it, we are able to export a lot of the downsides to our money printing around the world. In fact, we can push much of the cost. So every time we print a new dollar, we devalue the old ones,
right,
right? And this has not fallen very hard on the American consumer because so many of those dollars are held by other people around the world, right? So in a sense, if you wanted to think about it that way, because again, we printed roughly 40% of all of the dollars that have ever been created just recently. So that's what that has sheltered American consumers because so many other countries, so many other foreign governments, so many other foreign investors are all holding dollars. And if they get a whiff of this is actually costing me money. The federal government, the United States government, spending money and giving it back to United States citizens is actually costing me money, right? Because I'm holding these dollars.
right,
Um, if they decide that they're not going to hold that dollar anymore, they want to hold their assets in some other denominated currency, that spells problems for us. Because, and the reason that I say that is that it's not going to happen slowly in the effect it would likely happen all at once. Is that as soon as one investor no, and then it's kind of like a domino effect, and the next thing that you know, all of those dollars are flooding around, and yeah, that would be very problematic for us. I think,
Yeah,
um, at least in my opinion, this idea that anybody would start trading in oil in anything other than the dollar is something that we should probably be concerned about.
might be the one time that Ricky Bobby, if you're not first, you're last, might actually come into a great
Right.
might really work
Now,
there.
it's also because I think the people, despite what's said on television and whatnot, I think the people of the Federal Reserve understand what's happening. And I
Right.
think before that scenario that I just described will happen, you're going to see double-digit interest rates.
So
They'll go
I mean,
through
that also is a huge problem for us because I mean, if we get above 3 or 4, right, we're in major trouble with our debt load.
right. Well, and that's also we're going to default on the debt
You think so?
to some degree.
We've
Yes.
done it before. This wouldn't be the
Yeah.
first time.
No, it wouldn't be that. And there's precedent for it. In fact, that at least we will at least in some degree default on our debt. We did it in 1970, effectively, when we said that we were no longer going to exchange dollars for gold. That was in a sense a kind of quasi default. And the reason that we did that is we printed too much money. Um, and we will do something like that again. And I'm going to go out on a limb and say it will happen in your lifetime.
So
Um,
China already has, I mean, with the whole Russia-Ukraine thing, we've given China, a million reasons why they shouldn't be using the dollar.
mhm.
So, I mean, if that and then they get a whiff of some sort of default, they're probably going to do what you just said, and they're going to be the first one to dump all their dollars in the market to get the most.
The only issue with that is that, to a certain degree, I agree with you, yes. But that's going to be incredibly painful for China as well, because so
Sure.
much of their wealth is denominated in dollars. They're as tied to the dollar as, well, I wouldn't say they're as tied to the dollar as we are, but they're tied to the dollar. And you have to consider the fact that at least now you have to be very careful when you kind of start prognosticating about China, just because there's no such thing as reliable information that comes out of China.
Right.
I
Yeah.
see their COVID statistics for any proof. This is the
Yeah.
line.
Yeah. There's no way of ever telling how much or
Yeah.
what's actually going on.
Right. China is broke. I think China is broker than we are. I think China has grossly over, and I mean, China is the prototypical example of the failure of central planning. Effectively, China has built almost a dozen cities that could house millions of people, and they're all empty. They're sitting on the largest real estate bubble ever, and it's
Yeah.
something that would probably make the United States 2008 financial crisis look like a drop in the bucket. I don't know how China is keeping everything together, because again, their largest real estate firms haven't made payments. I don't know, like China has no leverage, and
Yeah.
I think that's part of the reason that the Trump era um, tariffs were actually working. And what I mean by that is, as much as I dislike tariffs in general, um, when Trump imposed those tariffs, the tariffs are hurtful to your own economy, right? Tariffs, at least in kind of ceteris paribus in normal conditions, are always bad. And what I mean by that is that, like, if I put a tariff on your goods, all that means is that when my constituents or my citizens try to buy stuff from you, they have to pay a higher price.
Yeah.
It hurts you and it hurts me.
Yeah.
Now, alternatively, what if I put a tariff on your widgets, okay, and then you start subsidizing the widgets and push the price down, okay? Then that actually might benefit my
Yeah.
constituents at the expense of your constituents, right? Your population, because you're using their tax dollars to make my consumption cheaper. Well, when Trump imposed those tariffs, that was effectively what China was doing. So when he walks around and he says China's paying the tariffs, technically, I mean, at least in real terms, that wasn't necessarily untrue, because a lot of when those tariffs were placed, that was the first time China had broke the dollar peg in a long time. They were devaluing their currency to push down prices to make exports cheaper. Um, And so, like, that makes me think that they're on the verge of insolvency, right? Because they needed those exports, they needed those dollars to pay their bills,
Yeah.
right? So I think that properly timed tariffs could really put China in a bind. But then again, at the same time, we have to admit that it's actually hurting the United States consumer, right? Because it's an arbitrary increase in consumption goods prices.
Well, China kind of also moved from China to Africa, and they've been kind of working their way through Africa and raiding Africa along the way. Maybe they're,
Well, no,
that's
that's
migrating
certainly
in
true.
some way.
Yeah. And that, but this is exactly what you would expect from kind of a centralized planned economy. To one way to cover up all of the previous mistakes, i.e., the ghost cities, is to constantly exploit natural resources or people. Like China, at least in my opinion, like I don't using opinions right here do not reflect the right state. I think is an absolutely atrocious regime.
Oh yeah, there's so many
And
human rights violations and all kinds of things. I don't think anyone would really necessarily disagree with that.
right. Well, maybe not the NBA. Um, but yeah. So right, and basically one way to kind of cover up those old mistakes is to constantly be exploiting new opportunities. But the end result of that entire process is just destruction and waste,
Yeah,
right? Which is why I think that China is not as formidable, at least as an economic power, as we tend to think so. Like planned economies do not work; they never have, and I think that's partially why you're seeing um, Russia having the problems that they're having. He thought he could be in Kiev in 2 weeks. Well, no, you can't.
yeah,
And I think that we would see the same thing with China. The only benefit that China has is that they have a massive population that they can exploit.
yeah.
Right? Wage labor there is effectively zero.
And they've kind of subjugated a lot of African countries just by burying them in debt.
Right. Um, and but at the same time, it really kind of depends on whether or not those African countries wake up and they realize that they don't have to pay that money back. What's China
Yeah,
going to do?
some of them
Um,
have started kind of doing that a little bit, being like, you can get out.
right. But we'll at the end of the day, we'll see. I'm not sure
Yeah,
exactly what's going to happen. I mean, we've kind of ventured away from inflation. Now we're into geopolitics.
yeah,
But it, I don't. I think at least from our perspective, one of the things that concerns me is I would like to see the dollar dominance continue, and I think everybody at the Fed and in Washington, they understand that that has to be the case. And the only way around that to stem the inflation, and it happened once before, it happened in the 70s. Paul Volcker came in, he quote unquote broke the back of inflation, and you saw double digit interest rates. And that's going to basically cause us to default on part of our debt and our obligations. Um, and without kind of being a pessimist, uh, I think that the first haircut's going to be Medicaid, Medicare, and Social Security.
most likely social programs usually are what gets cut out of those things.
Right,
Um, so the Fed's supposed to raise interest rates between what 4 and 7 times this year.
right. And I think they see the writing. Like I said, they're not going to let inflation gets out of control. So right now we have measured inflation. I think it's 7% on an annualized basis. I think it's probably closer to 12 to 15% on an annualized basis. It depends on what measure of inflation that you're looking at. The last time I looked at the GDP deflator, it was over 10, right? And so I would imagine that you'll see them get pretty aggressive with interest rates next year or the year after if that doesn't get down to single digits. They're going to live, and I think they're comfortable living with medium to high single digit inflation, 7, 8%.
Yeah,
I don't think they're comfortable letting it get into double digits. Which means that okay, so if you're trying to plan your investment, what is a vehicle with which you could benefit from high interest rates? And basically
well,
that
real
would be
estate. Real
well,
estate.
the issue with real estate is that you'd have to hold it in the
Yeah,
sense that if
not
interest
liquid.
rates get 6, 7, 8, 10%, um, nobody's going to be able to buy.
Right. Well, we're not too far from that. Really, I saw rates this morning hit 4% for the first time in 3 years, 4 years, something like that. So we're not too far from that.
No, we're not, which is why I don't think it's unreasonable that you'll see a high single digits. And it really kind of depends on what the Fed does with interest rates. Um, and if inflation doesn't slow down, they will take it into double digits. They have to.
So what if they don't raise interest rates? They just start winding down their balance sheet.
That's going to make inflation. Well, that should push down asset prices.
They should also stop inflation, right? Or help
Right,
at
right,
least.
because they're getting rid of property and pulling out dollars. So yeah, that is one. But the how do you wind down um, the balance sheet?
Without crashing the stock market.
Well, yeah, because it really kind of depends on how much of that do you think is artificially stimulating stock prices.
Well, I the amount that they have been doing, I mean, they had to do so much during COVID because it has such a reduced effect on what's already existing, right? So they have to do an enormous number to have any sort of effect at all to get any sort of stimulation. So do they
Right.
have quite a while to pull out before it even really affects much? Do they have a lot of room there or not, do you think?
That I'm not really sure about because because we're talking about, I think, what is their balance sheet in the trillions now?
Like 8 trillion, something like that.
Yeah. And it's not entirely clear what exactly they hold. Uh, but one of the issues is that if they start selling those, so part of the reasons we bought those assets was to stabilize banks,
Yeah.
right? Or whatever institution that was kind of insolvent. Here, give me your toxic asset. Um, but we bought them at prices like, so we're going to have to sell them back if we're going to unwind, but they're not worth what they were bought for. They're probably not worth half of what they were bought for, right? So you can alleviate the inflation by removing about half of the money, but you still have inflation.
What if the Fed just eats the asset and just destroys it?
Um,
Just write it off as a loss and
well,
move
then
on.
you still have the inflation. You know, how do you get the money back out of the system?
Well, they'll just buy the bad debts or the bad
Yeah, but
assets and
that's making inflation worse because you're putting more money
putting more
into the
money in. I
system.
see what you're saying.
They got to get the money out. The only other
Yeah,
way
so
they
have to
get the
sell
money
it
out,
back to someone. I see what you're saying.
gotta, they have to sell it back or they have to destroy the currency. So, alternatively, there is governments can run surpluses, which had never happened, right? So the alternatively, another way that you can pull money back out of a system is to tax it, and then not spend it, right? To just
Just
the
hold it.
IRS. Yeah. The
Yeah,
only problem is that we have run a consistent $1 trillion deficit since 2016,
since
I think.
Clinton or something.
Well, no, I think it hit $1 trillion during Trump. Was the first peacetime $1 trillion deficit, but at least my kind of the way I'm looking at it, I don't see any stoppage of that. Um, at least in our.
Well, yeah, the Fed has been increasing the balance sheet basically since 2008, right? Started off around a trillion. So yeah, Powell did talk about the other day. It was yesterday. He had his press conference. He did talk about unwinding the balance sheet some. Um, how far that
Um,
gets, I don't know.
so this we get into, and again, um, there was an old economist, and he described a process which he called the crack up boom. And this goes back to kind of Ludwig von Mises. And he was like, he's primarily like, he was the kind of the last person to write the formal thesis, or a big, this is how the whole economy works, right? Modern day economics is really fractured. So basically, you have these kind of very specialized groups, and they don't tend to wander into other areas of
Yeah.
economics.
Yeah.
But what he described is a process where you can stimulate the economy by printing money effectively. But what that does is it distorts factor prices. And then to avoid the recession, you have to print more money. And then you have to print more money. And he kind of went through this via um, his own personal experience through the Weimar Republic, right, where they went through this kind of super hyperinflation. And he says this
Yeah.
process of printing money, staving off the inflation by printing more money, he called it the crack-up boom. It's like eventually what all you're doing is you're making the problem more catastrophic because it will, at the end of the day, the invisible hand always wins. Like the markets will correct themselves because this process can't go on forever. And so that's why it's called a crack-up boom. Right? It ends with a boom. And I think that, I mean, without kind of, like, doesn't that seem like what we have been doing since, say,
Basically.
the
Yeah.
1990s?
I mean, if you
Every
just look at a chart of the S&P or the Nasdaq, it's like it looks ridiculous.
Right. And what ends up happening is to stave off because all of the political incentives are such that kick this can down the road.
Oh yeah.
Right? Because politicians can only see in 2 or 4 year increments.
No one wants to be the
And
guy.
well, no one wants to be the guy, and no one wants to deal with and part of this comes with just the general ignorance of the population as a whole, right? Most people don't understand how any of this works. All they know is bad now, good yesterday,
Yeah.
right? And so anything that you can do to fix that. Um, so yeah, we to stave off each inflation, we end up printing more money and we kick the can further down the road. Now, again, I'll add the same caveat I had from the last time that we talked. There are Nobel Prize winning economists that think everything that I'm describing to you is wrong. So, and
I
I
guess
do
we'll see, right?
Yeah, I do applied micro, right? This is we have kind of ventured outside of my formal training and expertise, but I am at least versed in a different type of macro, I guess, than what is considered kind of your standard neoclassical theory. Um, and I don't see any way around this other than either an increase in rates, a partial default, um, a cut in expenditure. And I think eventually what we'll see is because all of this is unsustainable. We'll probably see a combination of all of those things. And I think for at least my entire life as I was growing up, I was always told Social Security probably isn't going to be there for you. And everybody kind of, oh, yeah, yeah, yeah. No, I'm saying it like there's a good chance Social
Yeah.
Security is not going to be there for you. At least to anything like what we know Social Security to be here today. Congress is under no legal obligation to give you Social Security. It's not a liability. It's not counted on the balance sheet. And the same thing can be said of Medicaid and Medicare. So I am planning my future under those conditions. But again, this is my opinion, and there are people that disagree.
Do you think that they'll confiscate gold again?
I think they're going to try. If they, I would imagine that. Well, so let's go back to the kind of the last time we had a kind of Great Depression. They started with gold. Well, they started with price controls, right? And this goes back to all the way back to Hoover. Hoover tried to strong arm a lot of the industries into kind of preventing prices from falling. And Hoover gets a bad rap, or at least what I would consider to be an incorrect, but the do nothing president. No, he did a lot. In fact, he introduced the Smoot-Hawley tariff, and I would imagine that price controls and tariffs would be the first thing, just because they're politically popular, right? They tend to have relatively large support, and then you have to get into more extreme measures. And the fact that people are whispering about price controls now has me kind of concerned because they're not going to work.
Well, there's a more. I mean, did they do the same thing in the 70s or 80s? Did they confiscate gold again when they went to the, when they switched from the gold-backed dollar to the.
I don't think they confiscated gold, but they did break the link between. So it used to be the case where you could take your money and go and get gold, and
Yeah.
then they ended up destroying that link. So the only people that could do that were foreign banks. So I think that's what you might be referring to. I don't believe there was a and correct, you may know better than me on this, but I don't believe there was
Sure.
actually um, a formal confiscation of gold in the 70s.
Yeah, I thought I remembered reading something about, but I wasn't sure on the exact
But I know
specifics
I
of
know they did it shortly or during World War II.
it. So we're getting close to the hour, but
Okay,
what do you
yeah.
think about, um, maybe like last thing, what do you think about CBDC and digital assets and crypto and all that?
Um, I I flip flop on crypto depending on who I'm reading at the time. Um, I think crypto. So one of the issues that I see with something like a Bitcoin is that Bitcoin as a general medium of exchange is not viable.
Oh yeah, I agree.
The transaction costs are too high. Um, but the one benefit to Bitcoin is that it's anonymous. Large transactions can be made without, uh,
To the Fed.
yeah, without intervention. Um, and what I think will end up happening, and again, this is just kind of me speculating, um, we're going to treat Bitcoin the same way we used to treat gold. So, in a sense, if you like, are you familiar with how the story behind how we got fiat money? Um,
No, you can tell me. I mean, I have some idea, but you can.
okay,
I'd love
so
to hear it.
basically, you used to have all your wealth was stored in gold, and you would keep it at some sort of depository, some gold depository. You would pay them to keep it safe because gold was valuable, right? You didn't want to keep it in your house; you get robbed. We didn't have security cameras in the 1800s. Um, and or earlier. So basically what would happen is you would go put your gold into this depository and they would give you a certificate. And then that certificate, you show up there, they give you gold, right? And then you had to pay some fee for them to hold it. Well, it didn't take long for people to figure out that as long as there's trust in these certificates, I'll just give you the certificate and then we don't have to go get the gold. You can go get the gold whenever you want, right? So we ended up trading these notes instead of the actual gold because the transaction costs are so much lower. Um, and what these houses realized is that, well, not everybody comes for the gold all at once. We could actually print more of these certificates,
Yeah.
right? And that's fractional reserve banking is born. Like that was the start of fractional reserve banking. So what I'm guessing is going to happen is you have an asset similar to that. It's Bitcoin. So it has high transaction costs. So for me to give you Bitcoin for a cup of coffee is difficult. But
Sure.
what if we build a structure on top of Bitcoin, which is another cryptocurrency? And instead of trading the Bitcoin, we actually trade those other cryptocurrencies that can then be translated into Bitcoin at any time. So it's going to radically reduce the transaction cost. At the end result, what we're after is Bitcoin. Um, and you'll see, my guess, if it hasn't happened already, you'll see a cryptocurrency built on top of Bitcoin. And there'll probably be multiple cryptocurrencies built on top of Bitcoin, all of which will be redeemable in Bitcoin. So if you have enough of these cryptocurrencies, you're like, okay, I don't trust you anymore. Give me my Bitcoin. And they'll have a financial incentive to do that. You're going to pay some sort of transaction fee. That's how they're going to make their money. And you get your Bitcoin. And once you have your Bitcoin, and as long as that trust isn't broken, um, you'll see the same type of process, and that will facilitate economic exchange that is effectively seamless across the entire globe.
That
Um,
would be huge. That would be a huge transformation from what
well,
we
what
were.
what it will do is it will destroy the government's ability to print money. which is why I think you'll start to see. I mean, if you think about it in that respect, part of the reason that you use dollars is that dollars are universally exchangeable. Everybody will take a dollar. If we're ever in a situation in which Bitcoin is universally exchangeable, why have dollars?
Right.
Um, right? And so basically, what that'll drive down. I mean, the only reason that you'd want a dollar is so you can pay your taxes, but that's about it. Um, and so I think I don't know. This is I'm at the same time, Bitcoin is just code. It's nothing.
Right.
It's just it's a ledger. That's all it
Just
is.
yeah.
And so I fall on one of two extremes. Either Bitcoin is seriously probably one of the most undervalued assets ever. Like a single Bitcoin is worth millions, or it's worth nothing. I don't know.
Yeah. So I think I kind of feel like it's just an exchange of value. It's not really it's not value itself. It's a mode of exchanging value.
Right, and that's its primary value. So every kind of medium of exchange has had some sort of alternative use. So if you think about it, like if you imagine trying to start money, how do you do that? Can you go print your bucks? These are Kevin bucks.
Yeah.
Nobody says, I don't take that, right? Um, and that's what happened throughout time. So basically, the idea is that all money was created through some other commodity that had some value. Gold or silver was typically used for jewelry, right? Pearls were jewelry, and so, uh, but in the past they've traded rice or grain or whatever, right? And the reason that we would tend to fixate on gold or silver is due to it's malleable, easily divisible, and doesn't rot, right? So you can store it. And
Sure.
so that's why we tended to pick those. Um, and so if that's how currency typically starts, what value does Bitcoin have, right? What other purpose does it serve? And the only thing that I can think of is anonymity. You can do it like its value is the fact that you can do exchanges anonymously and tax free. And if is that enough to uh, substantiate kind of a new currency? I'm not sure. I do think that at least in the crypto market, there is a considerable amount of um, speculation. People are just gambling. Dogecoin or some of these other coins, like Dogecoin was a joke.
No, yeah,
Uh,
it was a joke to begin with.
right? And some of them are worth value. And but that's the thing is you never really know what the market's going to decide. And by the time you figure out what the market is going to decide, it's too late to buy in.
Yeah.
Um, so I
So
don't. Oh, go ahead.
no, so I was gonna say I don't really think that Bitcoin is completely anonymous because they are able to view the transactions on that ledger because the federal government has
That's
been able to
true.
claw back some of the like hacked money from that ledger by seeing who went there or what wallet it went to or or whatever.
Right. But if they don't know whose wallet is whose, I mean, you're right in the sense that every single transaction is transparent, or at least
Yeah.
moving from one side to that's the benefit of Bitcoin. But what they don't know is whose wallet is whose.
Yeah, that's why they're trying to implement and force that KYC on all of these wallet companies.
Right. And that is a problem, right? And you can understand why central banks would want to crack down. Like this is the direct kind of roadblock to what would be previously considered their monopoly on the medium of exchange. Um, and that that could actually be kind of a backward worst working prophecy in the sense that the more like the what's that old line in Star Wars, the more you squeeze around star systems, the more they're going to slip through your fingers type thing, in the sense that the more they try to squeeze Bitcoin or these types of cryptocurrencies, it may actually have the reverse effect of bringing people to them to get away of that from that squeeze, right? I think that they're going to come out with their own, like the banks are talking about, or the central banks are coming out with their own digital currency, which I think is kind of redundant. They already have a digital currency,
Yeah.
right? But it's a currency they control. The benefit of Bitcoin, at least from the people who use it, is the fact that no one controls it.
Yeah. So I think that the CBDC, the central bank digital currency, I think that their idea was that everyone opens an account with the Federal Reserve and then they have direct control over your account and how it's spent. And maybe they pay different interest rates, or maybe they require certain people to spend or save or whatever.
Well, yeah, and I believe you brought this up at least briefly in our last conversation. The
Yeah,
idea is that you could actually directly target money to people, um, and that would grossly reduce the transaction costs in that respect. Like if you wanted to stimulate this group of needy people in that area, you could do it directly.
yeah,
Um, that is potentially one of the benefits of, at least from the kind of the organizational, the bureaucratic side.
sure.
Um, I think you're going to, or they're going to find that they're going to have a hard time getting people to adopt that, just because of what we saw recently in Canada, in the sense that people who uh, don't agree with the current political order can have their bank account frozen.
Yeah.
And I think that that is potentially like a roadblock to kind of universal adoption.
That was kind of shocking. I was surprised that they went straight to that so quickly. I mean, Canada is usually the the cool one, the one that's kind of
Right. I
free
think
flowing.
it's, I mean, let's kind of take aside the politics associated with the truckers for a moment and just look at the actual act of freezing someone's bank account for political dissent. Um, in some degree, I think that that is incredibly dangerous. Especially given the fact that, as far as I could tell, for the most part, these were nonviolent protests,
Yeah,
and you're setting a precedent that um, I don't think is good. I think that everybody involved is being incredibly short-sighted in the extent that political opposition are licking their lips to use that new power, right? And if just political dissent could, and the fact that the word terrorist or terrorism is kind of thrown around nonchalantly, I think is setting us up for kind of a political kind of or a further political diffusion, which I think, at least for the stability of the nation, is it's kind of dangerous.
yeah, it's not good. Yeah, I don't know. There's so many things happening right now that are all like
Right.
not good.
But and we've gotten way off topic. Um,
Yeah,
so yeah, I think um, at least in kind of, again, kind of my personal opinion, and your readers and your viewers are gonna, I highly suggest go out and just get a broad spectrum, use your own intuition. Um, I think we're headed toward higher interest rates. Um, I think that we're probably likely to see a recession in the next few years due to the increase in interest rates, because they're not going to let inflation get out of control. And the that would be kind of my long run 3 to 5 year look at the issue, because I'm not sure that they can continue to print this much money.
yeah. Maybe they'll come up with some new mechanism to get themselves
Well,
out of the hole they've
and
dug.
that I also like absolutely add that addendum, because they got very creative in 2008. In fact, I can't remember if we spoke about this last time. We had, like, whenever I teach micro, or not macro at the kind of the principles level, we we're splitting it up now. This is fed pre 2008. This is fed post 2008, and look at all these new things that they do, um, as ways to get around what we thought were insurmountable roadblocks. And that is probably going to be the primary argument that would be leveled against me. And I think it's a valid argument in that you said roughly the same thing in 2008 and look at what happened. It's like, well, we did go through a recession in 2008. So
Yeah, I know it's a pretty bad one too.
right. But they, there are some really prominent people that were predicting inflation that never came. And part of the way, and we see now how they were able to avoid that, which was to hold interest on or pay interest on reserves. So all of these financial institutions were broke. I give you, $50 billion, right, to prevent a run on your institution. But here's the key. You're going to hold that $50 billion with me, and I'm going to pay you interest on those $50 billion, right? So if anybody comes looking for your money, for their money from you, then we'll give it to them. But otherwise, you keep that $50 billion from me. So it solidified the financial institutions, but didn't actually increase the money supply, is how that works. Now, I don't know if they can come up with some other kind of clever mechanism like that. But that's also been part of the driving force behind inflation, is that now that the economy is doing much better, you want your $50 billion to start loaning, right?
Yeah.
Well, as soon as that money starts leaving, now we start to see inflation. And I'm not entirely certain how you get around that issue.
Why don't they create some sort of like dual interest rate policy where lending and savings have different rates? Or they just start buying
They
fixed
are
assets?
the rate that they pay interest on those reserves is set by them, right? So, and it's always just a little bit less than the market rate, right? And the
Yeah.
reason for that is that the reason that you leave your money with me at the Fed is that if you go out and risk it, you might earn higher rates, but you're risking it. Right? So if I set my rate just a little bit lower, I can give you guaranteed return at a slightly lower rate. So they can, like they can manipulate the market rate by the amount of money they supply, but it's actually at the end of the day, all of the rates are linked. You can't break them.
What if
Does
they
that make
did?
sense?
And that could be another way of controlling it somehow.
I don't know how you would do that without absolute authoritarian type, right? Because you're going to have financial incentives to start moving money. And to make it work, I would actually have to come in and say, no, you can't. And so I'm effectively controlling your business from the top down.
What if they just what if they just make like lending at 1% and savings at 3%?
That would create all sorts of capital distortions.
Probably.
In the sense that it's going to perverse incentives. So the among the I think the best way to think about this, at least in the simplest form, if I had to give you like the Econ 101, don't distort prices, right? Prices convey information. They allocate resources, and an interest rate is just a price. If you think about it, the interest rate is just the price on time. So anytime you start distorting those prices, you're going to get time misallocations for the same reasons that a price rent control is going to get supply and demand misallocations. It's at the very most, it's like putting a band-aid over a bullet wound. It's not going to work in the long run.
Yeah, well, I think we're pretty far down the price distortion rabbit hole, though.
Oh yeah, no, we distort prices everywhere, and I would say
Yeah.
that in almost every case where there is a functioning market, they're bad.
Yeah. With that, it's
And
decoupled the market basically from the economy.
right, and I think the end result of that is a price misallocation in the stock market would be again how I would categorize that. I I don't see how the current regime as it's structured and the behavior can be sustainable in the long run.
So it's a mean reversion type of.
Yeah, if you
Lid.
wanted to think about it that way. But again, the Fed seems to disagree, and every single person at the Fed has a lot more credentials than I do from much better universities. So just something to kind of keep in mind.
Yeah,
Um,
they're right till they're wrong, I guess.
right. Um, and I would have been wrong in 2008 when I predicted inflation. Now everybody can ex post storytell. I think I have a really good explanation for why we didn't see inflation that is still consistent with my worldview. But one of the issues with ex post storytelling is you can always ex post storytell.
Well,
And
yeah. Well, if you just look at the data, though, the money supply has gone way up and the velocity is way down. I mean, that has something to do with it.
I think that's actually what's keeping a lid on inflation, is that reduction of velocity. And I think that's why, right? Because uh, you have PY equals MV. Um, and if M is going up and V is going down, it should keep roughly the price level
Yeah,
consistent.
yeah, sure.
Uh, what happens when V picks up?
It goes up.
Yeah, the end result would be inflation, which is
Yeah,
precisely why we didn't. So they printed the money way back in 2020 is when it started, right? And we're not really starting to see it until 2022 as we come out of the crisis, as people start spending more money, as that V starts to pick up. Um,
well, the Fed was the last 10 years talking about how they were going to get inflation going, and then one day they woke up and they had 7% inflation.
right. And that's one of the concerns that I have is that these things can always get out of control.
Yeah,
Like there's no inflation until there's a whole bunch. And that's part of kind of the concern around how, I mean, that's exponential growth in a sense, uh, because as inflation gets worse, humans behave in such a way that potentially makes inflation worse.
and I mean, if you think about it, you can kind of understand that because they've been doing this policy for 10 years to try to make that happen, and then some external uncontrollable events happen like COVID and tariffs and
Yeah,
whatnot
some
out of
shock.
control. Yeah, it shocked the system, and they've already been preparing for that, so that just was going to exacerbate the problem even worse. And now they can't fix it really.
Right. So the end result is that uh, I don't I don't know what is going to happen. I mean, I have speculation,
I think everybody's in
and
that camp. Just wait and see, I guess. I don't know.
right, the one thing that does has me, but I do know in a functional market where things are working as they're supposed to, you make money. Um, the best way to make money is to provide a good or a service that people actually value, and then they give you dollars for that thing, right? And I feel like one of the issues or one of the reasons that I think that we're in kind of a quasi distorted market is that it seems like I actually can make more money properly anticipating not the consumer but the government.
Mm, yeah.
And that if you're in that kind of situation, there are kind of radical distortions. Because if, for instance, if you kind of go back to the conversation we had earlier, I was like, well, it depends on what California does, or it depends on what, right? So we're in a situation in which the government is and their policy is exercising way too much influence on how goods and resources are reallocated into society and such that like that's not a healthy market.
And you can see it's breaking down everywhere. I mean, so today or yesterday, Tesla stopped issuing their $1 billion bond they were issuing because the market is on the fritz. Um, what was it, the nickel market or something is suspended. It's been suspended for a few days or weeks now because of the Russia-Ukraine war. So they're not trading,
Mhm.
is it nickel? We've seen,
Well,
car prices
yeah,
falling for
there's
these
a
things.
few, and that's the one thing is you never know. Like for instance, wheat. Ukraine is the bread, but like it's always. I mean, in when you kind of look back, it's like, oh, it's obvious that wheat, a war in Ukraine would have an effect on the price of wheat. But ex ante, when you start thinking about it, it's like, I don't know. I mean, Go look and
Yeah.
see what are their exports and whatnot. And there's some rare minerals apparently that are Ukraine is a large source of. So in and how those get the economy is not like a line, it's a web.
Yeah.
And it if you pluck one string, it can in weird ways.
Yeah.
Um,
Definitely. It's just finding that one string on, like, you have to do a like an autopsy and figure out what that string was.
right. And I would say that it's so complicated that to do it ex ante is probably impossible.
Yeah.
Um, but did you have anything else you want to talk about? Like
I don't
I'm
think
free.
so.
I don't know if we've already ran over, and I know that we
Yeah,
could.
we're over time, but I mean we've
Um,
covered a lot of different subjects. So
um, I hope this is useful, if anything, for just mere entertainment purposes.
yeah. No, I really appreciate you spending the time with me today to do this, and maybe we'll have you on again here in a little while to do another update and see how things play out.
Yeah, well, I mean, we could do it on a revolving 2-year window, and we'll
It's a
see
good
if the
amount of time.
predictions are any good.
It's a good amount of time to let things play out a little bit and see how it goes.
Right?
Yeah. Well, thank you so much. I really appreciate it.
It's not a problem. I always enjoy talking to you.